Welcome to the April 22nd, 2024 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. This week, the surprising financial reactions to Middle East escalation. And I'll give you a couple of surprises as we go through today's broadcast. Then we're going to cover something on inflation that appears to be significant. All right, here we go. This is the downdraft. Right here, you have the Dow Jones Industrial Average with a very healthy first quarter, ending almost at 40,000. Now we're down to below 38,000. Well, what happened? Well, first, Federal Reserve, they get upset when there's a big market rally and happy people buy stuff, and that drives inflation. And they said, so we're not going to cut rates because the economic data is too good and we don't like happy people. So we're going to delay the rate cuts. And of course, that led to a big part of this. Curiously, at the end of last week on Friday, there was a late day sell-off and we descended to about the same level. The Dow was actually down about 0.75% for the week. Normally, with Iran's attack on Israel, a substantial escalation in the Middle East, you would have expected maybe a 5 or a 10% drop in equity prices. That had been the pattern with Middle East escalation. Not so here. You were surprisingly resilient, and I'll show you why I think that's true. But the Dow has dropped 5% from its peak, and its year-to-date return is about 0.75% after this week. So it's a minuscule return and lost a big part of that prior gain. All right, that was the reaction, but it was resilient. Why would it have been more resilient than usual with escalation geopolitically? 9.4% is the earnings growth. Profit growth drives the value of companies. When you look at an analyst on a spreadsheet, one of the things they're probably doing is taking 10 years or 20 years worth of earnings and growth projections and deciding what's that company worth, what's the value. Well, if the Fed lowers rates, that value goes up. If earnings go up, then that raises the value of that company. Profit growth, almost 9.5% over last year. That's great news for the S&P 500, and it probably explains this week's resiliency. S&P 500 was down 2% for the week, and it's up about 5% for the year. Sales growth, 4.46%. This is surprising too. Retail sales came in double expectations on the positive side, and consumer discretionary companies reporting so far. This is only 70 out of 500 S&P companies. Just gives us a nice indication. Consumer discretionary, 39% growth. IT, 72% for the companies reporting so far. We'll bring this to you. That's why you subscribe to YouTube McGowan Group. I'm Spencer McGowan, founder of McGowan Group Wealth Management, and your financial weatherman with your weekly fast-paced tour of the global financial markets. Thank you for tuning in, subscribing, and if you like it, like it. Here we go. All right, this is oil. Oil's up 15% year to date. Well, this little downdraft from 85 to 83 was a surprise. Normally, Middle East escalation, boom, oil would go up, just a risk-on trade for oil in case of supply disruption. No supply disruption. In fact, U.S. crude inventories built, and so oil went from 85 to 83 this week. That was another surprising reaction contrary to prior history. In this case, where does that leave the energy complex? About a 13% year-to-date gain. S&P 500 hanging on to 4 or 5%. And technology stocks below 4% year-to-date. S&P about 5, as I mentioned. But for technology to be less than 4, it means that that big AI-driven rally has at least taken a pause for now. But the AI supercycle is important, and we'll cover more in future episodes about that. What's this? Inflation. So, my dad, Papa Dean, he's on the radio show at NetWorthRadio.com quite frequently. He's always said there's a big relationship between regulation and inflation. And I wanted to graphically study that. The more regulation, the harder it is and more expensive it is to make stuff, right? You got to have people that comply with the regulators and spend time with the regulators. And not all regulations are good. In fact, Bill Clinton was the guy that said, hey, if you make a new rule, you got to get rid of the old rule. And of course, in the 90s, we had low inflation. I'm about to cover that. This is 1960, less than 20,000 pages of regulation on the Federal Register. Boom, wow, it skyrockets to about 85,000. So you'd had 5 times as many regulations by 1980. And what happened to inflation? It went to 13%. When you overregulate, what do you get? Less supply of stuff and prices go up. It's natural. Then Ronald Reagan takes office. He takes the Federal Register, nearly cuts it in half. That was one of his intentions and campaign promises. And what happened to inflation? It goes from 13 to 1. Wow. That was amazing. And there were tax cuts during that time. So it was a happy recovery after the high interest rates and high inflation. Then we start to creep up again, right? And things kind of creep up in the 90s, not so much, but Bill Clinton kind of put a lid on the overall number of regulations. Then we had some cuts here, but boom, by 2016, huge growth in the Federal Register, nearly 100,000 pages. Last year we reached a little over 95,000 pages. If you read 1 page a minute for 16 hours a day, it would take you 100 days to read all the pages, just saying. Now, this spike right here, we see Trump cut the regulations, right, from nearly 100 down to about 80, and inflation stayed low. Well, and even though you had great economic growth, Federal Register exploded in the year 2020, and inflation correspondingly peaked at about 7% in 2022. Now we've done it again, and we've almost reached a new record. So that's part of the reason the Fed's saying, inflation is not over. I did want to cover clean technology. There's going to be a good buy point for the profitable companies, maybe late this year, maybe late next year. But clean tech is unwinding, minus 16%. A lot of the startup EV makers, they're trying to get a lifeline of some capital. That's a pretty big decline. And this I think takes some time, because here's your 2020 peak when everybody said we're going to go green really fast. Well, it turns out it's harder, takes longer, and the companies aren't making as much money. Now, come in each and every week to YouTube McGowan Group, and we serve affluent families right here from the Crescent in Dallas. You can set your time for a brainstorming session to update your plan between now and 2040, 2050, and we will set some targets, but also give you some ideas on cash flow, and we'll give you a guided tour of the current portfolios at McGowan Group Wealth Management. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. we can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.